Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Taylor Riggs, Katie Greifeld in for Caroline Hyde. We're counting you down to the closing bell on this Friday afternoon, last trading day of April. We now go to our global simulcast with Carol Massar, Mike Regan in for Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And Carol, we came into this day knowing that we were headed for a down week and a down month, but those losses have deepened as we get closer to the closing bell.
Yeah, just look at these last few minutes. We're seeing this selling accelerate. I was just looking at a couple of indices. The NASDAQ 100, we are officially in a bear market. If you come from the top back in November of 2021, down 22%. And meantime, the VIX has really shot up about 4 points, almost to 34. So the volatility continuing. Our last guest, though, Katie Nixon over at Northern Trust saying, I'm like, can it get worse? And she's like, it can always get worse. But typically, we look back at these times as a buying opportunity.
Things can always get worse, right? Right. Well, on the print side, we always like the size and scope. How bad of a day is this today? And I'm looking at our function here. This is the worst day for the S&P 500 since June 11th of 2020. Worst day for the NASDAQ 100 since September 8th of 2020. Just a really ugly day. And just forget about yesterday's rally. We're back at those lows. And what a way to go into the weekend.
And Mike, some of the worst months that we've had since 2020 on the S&P, and the worst month since, I believe, October 2008 here, if you're looking at technology. And Katie, yet yields are climbing, and we are climbing 10 basis points across the curve. No sort of risk haven here for bond markets today in full faith and credit.
Well, that's the thing. Where is your haven? Even the dollar lower today.
All right, we're going to take our time and walk you through everything that happened today on the weekend or in the month here. Let's start off with the Dow Jones Industrial Average. It's going to finish the day down roughly 940 points as we wait for these numbers to settle. That's about 2.7% lower here on the day. Believe it or not, overall, that's your relative outperformer on the day. The S&P 500 is going to finish the day down by about 156 points. There are only 14 stocks in that index that managed to finish in the green. Overall, it's down 3.6% here on the day. It's going to finish out the month down about 9%. The NASDAQ Composite down 537 points or more than 4% here on the day, and now giving it a month-to-date decline of roughly 13%. The Russell 2000 also going to finish lower here, Carol, by about 2.8% here or so here, and on a monthly basis, it's down by about 10%.
I'm so glad you took us to a monthly basis, Romaine. I'm just pulling up the S&P 500, taking a look at the members and what has been the best performing stock in the S&P 500 over the past month. Twitter up almost 21%. The worst performing, what do you think it is, Romaine?
Netflix.
Nicely done, guys. Down about 51%.
You know, Carol, I want to bring some size and scope. I think Romaine smartly mentioned only about 14 members or so higher on the day. We're diving 2 levels down here for our radio audience, the sector winners, the sector losers. There is not even one sector winner today that is in the green. A lot of red. Let me walk you through this. The best performer, which is still down 1% on the day, was auto and auto components. That could be Tesla. Otherwise, very defensive. Consumer durables here. You get some pharmacy, household products, food and beverage, but those are still off 2.5%, as there are some concerns that even inflation can't hide out in any of these products. I want to go down to some of the worst losers, Carol, and it is getting really ugly here. We're looking at everything off about 4 to even 10%. The retailers are off 9.5%. Semiconductors, looking at Intel, for example, that sector off 4.9%. Software as well, really big tech off 4.5%. Really struggling here to look at anything that could be in the green.
Yeah, talk about struggles today. Check out shares of Amazon, pretty much just finishing at their lows of this session, down 14%. That's the biggest one-day drop since July of 2006. We've talked about a lot of superlatives today. Well, there's one for you. We know the story, right? We've been talking about it all day here at Bloomberg. Really concerns about the overspend, the overhiring during the pandemic, and now we're seeing e-commerce sales slow. VeriSign is another one I want to mention, down about 14%, a top decliner in the NASDAQ 100 and the S&P, dropping the most in 2 years. The company lowering the top end of its full year outlook. And then to some of the gainers, folks, there were gainers. I mentioned Chinese stocks that trade here. Pinduoduo, that was up about 13.5% in today's session. This again, as Chinese officials, Romaine, are talking about supporting now the tech sector, so they gain. Mohawk Industries, check it out. That one was also up about 8%. And this company giving some upbeat in terms of
You
its
want
forecast.
new floors. I guess that's going to be recession-proof maybe in there.
Well, it just shows renovation emotions are continuing, right? And that kind of stuff is playing.
I do want to get to the idea here, though, of just how broad-based this sell-off was. I mean, officially now we had 96% of the S&P 500 lower on the day. Remember, on Tuesday we had a similar sell-off of roughly 94%, and last Friday we had a sell-off of about 97% of the members being down. And there's been a lot of talk by some of the strategists out there who basically saying that you need to see a string of these sort of 90% plus down days in order to really start worrying. That was the message when we had the one down day, the 90%. That was the message when we had two. Now this is number 3 in the span of about 6 trading sessions. And you have to wonder when you start to worry about the breadth of these types of sell-offs.
Yeah, I want to make Romaine's eyes roll a little bit by pointing out some of the things that the technical analysis would look at. We did set a new closing low for the S&P 500 today. Actually, we're the lowest since last May of 2021. S&P now down 14% from its last high. If there is one sort of silver lining in that cloud is we didn't breach that intraday low from February. Something that chart watchers will watch pretty closely, but really hard to take much solace from that today.
What is the Eco Chibu? What is that doing today?
Ichimoku Cloud? We don't have enough time to talk about that.
All right.
I do want to talk about the yield space. I know that we're really focused here on the equity markets, but we're smart. We try to do cross-asset analysis. Katie mentioned some dollar weakness, and it was not sort of a bond haven type of day. Full faith and credit, if you're thinking that's the safest of the safe havens, not today either. And I think herein lies the problem. As you can see here on the week, yields are climbing, and they are climbing higher. For the year, why don't we take a guess at how much the 2-year yield, Katie, has risen this year alone?
Like 1,000,000 basis points?
200 basis points this year alone. That's one of the biggest increases in yields year to date we've had in 28 years. You have to go back to the 90s to get these kinds of moves. That's the Federal Reserve problem. That's the problem for the discount rate on how we're valuing these equities. Yields are moving higher even on classic risk-off days.
And isn't it also a problem? I'm looking at a 10-year at 291, but a real yield on the 10-year still negative, though, starting to approach zero. But you would think that would be higher. I mean, you understand this better than I do, but you would think it would be higher at this point, given all the jawboning out of the Fed.
Except, Katie, all the moves have been a lot in the inflationary concern space. And so the math, when you think of real plus inflation equals nominal, is getting tricky.
It is. And I'm so interested to see what happens for sort of the asset allocation picture. Once you do have actually sustainably higher real yields, positive real yields, what does that mean for equity allocation? But also the question of what is a haven right now? Taylor, you have touched on it. I think it's fascinating because I don't see any havens in this market.
Well, absolutely, and that's been the struggle for everyone. Is how do you play defense in this market? Energy is the best performing sector this year in a really nasty market. That's obviously the opposite of defensive stocks. And with these rising yields, those dividend plays aren't as attractive as they once were. So kind of nowhere to hide at the moment.
Yeah, but I mean, the energy is kind of in stasis now. I mean, so that trade is kind of off when you really think about it. And I guess what's left here, right? You talk about Mohawk being up and Honeywell being up on this day, Kimberly-Clark being up at least on a weekly and monthly basis here. Is that where we go to?
I don't know.
Carol, just quickly, if you want to look at a safe haven, you're finally going back into the yen. We've broken through 130 finally here.
Well, I guess what we're going to have to wait, is really get through that Fed meeting next week. I'm also thinking about the Warren Buffett Berkshire Hathaway annual meeting over the weekend. Warren Buffett, his first time in person since the pandemic. Is he going to look at this market? This is a value guide and going to say, okay, there's a lot of fear out there. This to me is a buying opportunity. He certainly has been putting money to work in this environment. So I'm curious about that. And then get through the Fed meeting, get through the jobs report next week. And what does it tell us about the economy? This is a moment of where we are getting into a reset. We see it with Netflix. We certainly see it with Amazon, that we're all not going to be acting like we were the last 2 years. We see it with the airlines taking off, no pun intended.
Yeah, I mean, certainly so. And I mean, just to point out with Berkshire, I mean, you're talking about at least their stock, based on their stock, they're up like 8% on the year. So, I mean, pretty massive outperformance versus the S&P. I mean, the S&P's down 13%. And if you could just bet on Buffett for, 8% or whatever.
It's a mutual
I do
fund,
think
right,
we need
Katie?
to talk about Friday, though, that jobs report, because, I mean, the labor market, it's sort of the shining star of the economy right now. And the resilient consumer, miserable but resilient. I mean, you have to think that's because the labor market has held up the way it has.
Also, I think it's important to check in on the VIX at a time like this. VIX up a tidy 3.7 vols, 12.4% to those who hate to see the VIX quoted in percentage points.
Please don't do that.
Don't do it. Romaine gets all... You want to see his eyes roll. That's what's going to happen.
It's Friday. It's time to make Romaine's eyes roll.
And I also want to point out, I mean, now that it's good to go cross-asset here. I do want to take a look at crypto as well. We don't talk about it as much, of course, with the Caroline being out. But some of the moves that we saw this week here, where it kind of did punch back above 42,000 and then fell back. It's now camped out right around 38,000 and change right now. So it's down about 3.5% here on a daily basis. But more importantly, it's this idea of the correlations that we were seeing in crypto a little bit earlier this year with the tech stocks overall. And I wonder if those correlations, Katie, are still holding up, and obviously holding up maybe to the detriment of crypto writ large.
For the detriment of crypto, I would say. I mean, it's not a one-to-one correlation, but it's pretty darn close. And I mean, Bitcoin obviously selling off today. The smaller coins selling off even more. You look at Ether, for example, down 5%. Looks ugly.
All right, ready to put a fork in it, guys?
We're going to keep going on Bloomberg TV. What do you got, like a wine guy coming up on your show?
Just going to have to wait and see what's coming up. All right,
Mike, seriously, her show is like lit.
Why do you think I'm here, Romaine? Come on.
All right, guys, that's going to do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We will see you again, same time, same place. Well, actually, we're going to be on the West Coast, some of us, on Monday.